Hello, this is Brian Shannon from Alpha Trends Blogspot. Today is July the 8th, 2007, and I'm back from vacation. Let's go ahead and take a look at these markets. The S&P 500 continues to show this pattern of lower highs and lower lows, although we had a very nice week last week. Market was up just about every day, and I think it was every day. But it's back above the 10, 20, and 50-day moving averages. However, those moving averages do continue to cross back and forth above and below each other, so indicating overall neutrality even though we have the lower highs and lower lows. What that tells us is it's time to be cautious, continued time to be cautious. We had that break below this low that I think caught a lot of shorts off guard, and then a subsequent rally. Now it's going to be important for the market to get back above 154. Reclaiming that 154 level will put the buyers back in control, and realistically probably above 154.30 or so puts them back in control, and then I think we can look for higher highs in here as well. One potential scenario is that this is a left shoulder here. We've just formed the head with that drive below it with that lower low, and maybe we form a right shoulder in here. So we do have an extended market in the short term since it just rallied from 148 to 153. So we've had a 5-point rally over the last week and a half, and perhaps we can maybe run back up to this area, then start to form that right shoulder. That would be the more bullish scenario, I think. Then to get these moving averages all kind of lined up the way they should be, with the 10 above the 20 and the 20 above the 50, putting it in a nice position for, as I just said, higher highs. But here in the short term, we saw that you know, before I left, I guess it was right around in here, the market had taken this 5-day moving average, broke down below it, and then trapped shorts in here once again, who are really looking for the market to fail, I think, looking at that as a failed move off the Federal Reserve. But then a nice steady upward movement in here. And like I said, it's been nice and steady, higher highs and higher lows, just stair-stepping higher. So it looks like the support right now, the best support is about 152.5, right around in here with these recent highs. This resistance ought to act as support around the 152.5. Then look for that 5-day moving average. Short term, though, I think you've got to be bullish because we've got a rising 5-day moving average. However, we are approaching a potential resistance level. This isn't resistance until the market runs up there and is turned away. It's a potential area, which means short-term traders, it's bullish, but you start to be cautious, tighten your stops, look to take profits at the first signs of a little weakness, because it could get a pullback. The Nasdaq, I think I was one of the few people who wasn't looking for this market to break down a week and a half ago, but we did see a successful test of the rising 50-day moving average, once again showing that the direction of the 50-day moving average is very important. And that goes for the SPY as well, because while the market was below it, the direction of that 50-day moving average was still higher, and that's really what kept me bullish on this overall market and saying we want to give the benefit of the doubt to the buyers. The Thursday before I'd left, I said that I was looking for a pullback towards about 47.35, which would have been right about this level, or the 5-day moving average, and then it could set up for a push out. I made a target of 48.50, which was higher highs. It's taken that level of 48.50 out, so the market is at new highs, not all-time highs, but multi-year highs, which is important. Obviously, it's got a long way to go for all-time highs, but this market continues to act very strong, and a lot of this is coming, I believe, at the expense of the short sellers, which is a good thing, because that's what you get for fighting the trend. When you're in an uptrend, you want to be long, or if you're taking short positions, you want to be just taking positions in stocks that are breaking down, and for very short-term trades only. The path of least resistance is what pays. So for the people that were begging me to say this market was bearish on YouTube, you got to listen to the message of the market. Don't inject your opinion into the market. The market doesn't care what you think. The market doesn't care what I think. Our job is to objectively observe what the market's telling us, to listen and to take action based on what the market's telling us, and to adjust that strategy as well based on the dynamic information that's always being given to us in the market. And that means that's what stops are for. No one's analysis is perfect, and I see these guys saying, oh, you know, your analysis is like the weather, And you know what, it is to a degree, but the weather changes, the market changes. So you can't just set a plan in motion and think that the market is going to adhere to what you put your beliefs upon the market. You have to adjust to what the market's giving you, and that's what stops are for. But if the market is in an uptrend like it is here, we have to continue to give the benefit of the doubt to the buyers. It is getting extended here in the short term, so I'd say just be a little bit careful, but there's zero signs of it topping out even on the short-term basis. So benefit of the doubt continues to go to the buyers. Look for maybe a test of the 5-day moving average sometime over the next couple days, and I think that'd probably be a good opportunity for at least for a bounce trade. The SMH was really the leader in this market over the last month or so, as it pulled back to this prior resistance level on the weekly time frame. That resistance level was tested, did hold its support after a little failed breakdown in here, and that's what I was looking for as well. So these failed moves often lead to fast moves, and that's where that comes from. It broke out, sucked in some early longs, they spit it out, and now it's nice, steady uptrend in here. We've got the 10 above the 20, above the 50. This market is doing exactly what it's supposed to do in an uptrend. There's no reason to think it can't continue at least up to the $40 level or so. That's within spitting distance here anyways. But it's making higher highs and higher lows. Now we got to look really at a longer term time frame to say, okay, if it gets past this area, then is it possible for it to see up to about the 45 level? And I don't see any reason why not. That's not what I'm calling for. What we have to do is make our adjustments, and as long as it makes higher highs and higher lows, we do continue to give the benefit of the doubt to the buyers in the semiconductors and every other market. As it broke past this level of resistance last Thursday, it looks like, that's when we saw the bulk of those gains. But rising 5-day moving average indicated that it was most likely to break past that level of resistance. And here we are again at multi-year highs in the SMH. So continue to be bullish there. No reason to look for a top. If you're betting against this market selling short, well, I'll hold my opinion to myself. But the fact is, it's in an uptrend, and you're making things more difficult than they need to be. The IWM continues to be neutral, but it's very impressive how it keeps running back up to the high end of this 81.5 to 85 range, and it's extended here, so I wouldn't look for a breakout quite yet. Maybe a pullback down towards the 10 and 20-day moving average, and then a break higher would be really nice to see. But we've got that 10 back above the 20. They're both rising. The 50 as well, and that's what I was saying, that maybe on the SPY, if we got a pullback, that those moving averages could set up the way I want to see them, which is very similar to this. This is about where the S&P is in here with this mess, but right now this IWM is looking like it could break out sometime in the next week or 2 weeks. I'd like to see a little bit of a pullback though first, and then see it break higher and continue to give a difficult time for these short sellers.